We're going to talk about all of that stuff here to help us, the investment pros. Tom Sullivan, Fox Radio host. He's back again 2 days in a row, Tom.
Hey.
We're glad to have you.
Glad to be here.
Hey, Jim Frischling is also back, president of NewOak Capital. And some people are contrarian, would say that that's not a good sign. In other words, the contrarian, particularly when it's individual, but considering how bad the experts have been, Jim, maybe it's a sign that they were wrong last year. Maybe they're wrong now for backing out.
I mean, all week long, you guys have been telling people not to panic. And I think the last couple of days has been proof that it was good to kind of keep a steady head about you. The sell-off was actually somewhat orderly. And if I look at the rally the last 2 days, 9 of the 10 S&P sectors up over 1%. It seemed to rally on an orderly fashion as well. So there was no panic selling. I didn't see people going crazy. But the fact is steady oil, dovish Fed comments, and even talking about other central banks needing to, do what it takes. I think we're going to have a nice interest rate environment. So we're going to pose on earnings. I like what the market did the past 2 days.
Well, so what we're really talking about, though, are we revealing a problem with the rally that a lot of people have talked about? Then the top line can't be moving. In other words, revenues are stagnant. That's why this wage is a problem. Because if your revenues are up, then maybe the wage issue wouldn't be such an enemy to your bottom line.
Sure. I mean, it's company specific, but you're right. I mean, we talked about the stock buyback. We talked about ways in which people could spike their stock price if they can't generate more revenues, then they got to do it on cutting costs. And to Tom and Joni's point, my own company, comp benefits related. The most significant, our assets are our people. So while it's great to be paying people more, that is certainly a cost that is meaningful to our bottom line. So ideally, you make it work both ways. Grow your revenues, increase your expenses. But when the revenues are stagnant, to your point, it costs that.
From the what do you like, Jim?
I went with Paychex with what I expect to be a stronger job report. Benefits, human resources are in demand, and Paychex uniquely focuses on small and mid-sized companies. And as you just put up on the chart, they're the companies doing the most hiring, and Paychex is going to be a big beneficiary.
Tom Golisano, though, is he still if he's still CEO? Remember he ran for New York governor a couple times? I used to love that stock, and that's a beautiful looking chart. Yeah, no debt. What do you think? Jim?
No, I agree, and I like it a lot. I think you highlighted what the GSEs are doing, Fannie and Freddie, and lowering the down payments. That's going to attract more first-time buyers. And you have the Federal Housing Authority lowering their insurance premium. Again, the government's getting bigger in housing, and Horton plays both in the early stage first-time homeowners. They also have a presence in the high end. So they're in both markets, and they're going to benefit from the explosion of first-time buyers that explosion's too much. They're going to benefit from
So you're expecting them. Do you think the millennials will step up?
I think this is exactly shifting their money away from looking at the brick and mortar stores and onto online retailing. That's where their money is going. That's where the job opportunity is.
So far, the street doesn't like the news.
I was going to say, I think the death of retailers was grossly exaggerated.
Yes.
And what we are seeing are a workout. You have the online shopping. You've got the brick and mortar. And I think we're seeing the hybrid model now where the brick and mortar guys are starting to benefit from
the omni-channel thing. Right. You know what? And I will agree. I remember I
actually appreciate Heath to help me out with a high-end pick because I went Tiffany's. Their worldwide sales up 8%. They have a share buyback program, and they also got rid of about $400 million of debt. I think they're very well positioned.
I'm in Tiffany's, and I'm a little worried because it's got a high valuation, which I think it deserves because of the long term. But what about the impact of a strong dollar? You can't get those Europeans coming to that flagship store in Manhattan, and also Japan's recessionary.
And I think that was one of the headwinds, except it looks like their numbers in Asia, for example, which has a strong economy, actually delivered. So I think there's such a brand where people are aspiring. They may not be the highest end, but the fact is there are people who are doing a little better who are going to spend money at Tiffany's.
People around the world, particularly in Asia, with the diamond engagement ring. An American advertising executive made up that culture. So, Jim, you're hiring a lot of people right now.
We are, and I think I'll split the issue into two parts. One is I would absolutely hire someone that had a criminal record. I'd look at
you make a distinction of the crimes, though. Obviously.
Well, I'd judge it on its merits. I'd judge the person on his or her merits, and I'd evaluate the information. But to Tom's point, I don't like the idea of my being regulated and start making it more difficult for me to either have that information or the number of ways that I have to not touch certain topics. I'd like to be able. I'm fine doing the hiring, but I don't like the idea of actually making it just a little more difficult for me to get the information. It's just going to waste my time. I'm going to get that information eventually. Yes. By banning the box, you're going to make me go possibly through some steps that otherwise I wouldn't.
They are making it very difficult. The EEOC, there are about 3 or 4 government agencies, and they're going to step it up this year. Watch for some real federal legislation on this. Because Jay Rogers is the CEO, and this guy's brash. He talks a lot of smack, which I like. He's a free market guy, but he's been a terrible CEO, I think, for shareholders.
I think what I like about the pick is they have a commitment to product development, which I think is essential for the space. They're looking for things that take up less space, have more power. So I do think it'll be volatile, but I think the brashness of the CEO and his commitment to product development is why I find it interesting.
Micron missed yesterday. Stock was down a little bit, came back, and then it was up big today. These semiconductors, I think, will get a pass sometime this year. What do you think, Jim?
I went slightly under Heath, but still a strong 250.
I'm feeling Bob Barker-ish here.
Yes.
You're not going to go 250 and 1, are you?
No, 224 over the last